This is Worldwide Exchange. If you just joined us, I'm Ross Westgate. Here are the headlines today from around the globe. Markets are rife with rumours about the Spanish aid deal, but the lack of detail has weighed on investor sentiment. That sent peripheral bond yields higher. Limiting ATM withdrawals, imposing border checks, launching capital controls. Just some of the reports suggested by EU officials are exploring their options for a worst-case Greek exit scenario. And who knew and when? Reports say some JP Morgan executives were told about risky trades at the bank's London office more than 2 years ago.
You're watching Worldwide Exchange, bringing you business news from around the globe.
So you've just woken up stateside and tuned in. We are called a little bit higher right now for US markets, bearing a slight improvement in asset prices, well, stock asset prices here in Europe. The S&P 500 currently trading some 4 points above fair value. The Nasdaq at the moment is some 10 points above fair value. And we're around about 61 points above fair value for the Dow. As far as European stocks are concerned, we hit the best levels of the day an hour or so ago. At the moment, the IBEX is up 0.5% after being down 0.5% earlier. Similar sort of moves, 4/10 for the CAC Crom. Dax up 0.6, the FTSE 100 up about a third, despite the fact we had very weak industrial production data, much weaker than expected for the month of April. So a lot of opinions have already been expressed today on CNBC on what investors are supposed to do. Here's a recap of some of those thoughts.
In this case, we want to be long on the dollar, long on the yen, short on the Aussie, short on the CAD, basically long safe havens and short commodity high beta currency.
This reasoning does make bonds look rich. However, we're still looking for yields to touch new record lows. Before then, the market will force policymakers to come up with a more comprehensive solution.
I'm looking for anything, especially on the buy side, is taking a more longer-term view, so they've got to be deep value or defensive qualities. Now, cardboard doesn't have defensive qualities, but it is rapidly becoming a deep value stock.
And talking about Spain, it and the EU are under increasing pressure to outline the details of its €100 billion aid package to recapitalise its banks. According to a report from the Spanish daily ABC, the government will receive a loan with a 3% interest rate and a maturity of 10 to 15 years. But many questions still remain about the source of the funding and how the deal will impact existing holders of Spanish debt. Joining us from Madrid, Sara Perez-Frutos, partner and director at Dracon Partners. Sara, thanks very much indeed for joining us. Look, give us your own view. Yesterday, investors decided this actually hadn't changed the game very much, and we saw Spanish yields spiking higher again, and indeed that's where they are maintained as we go through this session right now. Are Spanish bondholders going to be subordinated, whatever happens, whether the money comes from the ESM, the EFSF?
Yeah, exactly. The doubts about the plan is so big and so confused that the investor, they don't know exactly if they invest in the Spanish market or they may take profit like we could see yesterday. Today we have so much volatility too in the market, and we must to wait exactly how the mechanism or the actually structure that is working on Europe that have more than 200,000 billion euros, and that it's more than double that the Spanish bank will be in it, or we need to wait to the new structure that will be working on in the next July that will have cash, because the actual structure hasn't cash, that only have the ability to have debt. And this debt will be passed to the Spanish structure, to the prop, and then from the prop to the bank. So there are so much confused in the market, and really we don't know exactly what will going to be the details. We need to wait until the next week, and the election in Greece will be exactly a key point.
The history of bank recapitalizations, though, is that when you give money to a bank to recapitalise, it was a point James Ferguson made, is that then they can actually call in their loans, and actually what you get is you get a shrinking in loan books. Now, politicians seem to believe that recapitalising banks means you're going to get more lending, but the history would suggest once you recapitalise banks, that's when they suddenly shrink back their lending dramatically.
Yeah, because in fact this money is not to lend to the small companies or to the retail people. No, this cash, this money, this debt is to reinforce the balance of the bank. So until this time, to the banks have enough strong to lend again money pass around 6 or 8 months. So really in this period of time the lens is strained. So it's not will be a quickly tool to reinforce the growing of the Spanish economy. So in the next months, probably in the summer, we're going to be again a credit crunch from the Spanish bank.
Yeah, you know, we hear a lot about, you know, public sentiment in Greece. We spend a lot of time in the financial industry talking about these issues. I'd be curious to know, what is the sentiment? Is the average person, is this a big topic of conversation all the time? Give us a little idea of, you know, how the average Spaniard is really viewing the current scenario.
Really, here in Spain, we don't feel that we are like Greece. First of all, because Greece lied to the European Union. Second, because we have a new plan, a new government, a new plan very, very aligned with the German key points, and we will never fall to the European Union. We see the rescue like really a help to our banks, because in fact our banks have a lot of problems, but our state, our country hasn't the same problem like Ireland or like Greece. Here we are very worried, of course, but we are very worried about the credit. When finally the banks could lend money to the retail people or to the small and medium companies. But we don't feel that we are Greece, and we don't feel that we are in so huge problem like Greece, Portugal and Ireland.
All right, Sarah, thanks very much for that. Sarah Perez-Fritos, Partner Director at Dracon Partners in Madrid. A couple of snaps will just bring you to. Fitch, first of all, says a disorderly Greek exit could increase core countries' liabilities. A disorderly Greek exit could lead to a wider euro breakup, and as a result, they say the US, UK, and French AAA ratings are all under pressure. So Fitch saying US, UK, and French AAA ratings are under pressure. And we've just had an auction as well out of the UK. 5-year gilt, the average yield on that under 1%, 0.927% for 5-year UK money, which is extraordinarily low yield in an auction. The bid to cover on that 1.28, which I suppose wasn't bad, bearing in mind the extremely low